Welcome, Season 2. Peng.guo and I are here with our first episode, calling this one A2. So glad you're along for the journey. We really appreciate the support. Hope to bring the content that you're looking for. And this week, we're going to be topical. It's going to start off with markets and the stock market specifically. And what we're saying is relocate now. We firmly believe this is a put your pencil down moment. Equity investing in China has changed. We've been telegraphing this for many weeks now, and we're going to be very specific what that means. The debate isn't a bull or bear case or sector analysis. It's what strategy will you put in place that will give you acceptable risk-adjusted returns. The changes that are going on in China are good for US investors. The era of Chinese stocks rushing to list in the US is over. Furthermore, we believe that the 140 or so Chinese firms currently listed in the US will relist on the mainland or in Hong Kong. When the dust settles, US investors are going to simply allocate between Chinese stocks listed on the mainland and in Hong Kong. Well, on the mainland, Shanghai, Shenzhen, and now maybe even Beijing, but we'll get to that. In fact, if you follow the money, flows have been going into the mainland every month, positive flows, not redemption, positive flows into the mainland since November via Stock Connect and QFII. This is a contributing factor to the significant outperformance of ASHR. Remember, that's the A-share ETF CSI 300 mainland stocks versus PGJ and KWEB, which are the high-flying Chinese stocks listed in the US. What investors need to think about is where is the proverbial puck moving? A lot of people like to talk about Wayne Gretzky, but few people can do it. So what we're telling people now is all of these stocks are going to list on the mainland. And even some of these great high-flying names are going to be listed in the mainland. Don't be fooled by the small uptick this week in a lot of those names. We firmly believe they're going to be relisted on the mainland.
From the stock market, I think actually it's pretty clear. If you see the KWEB, so on the February 17, that is the highest one. So it's almost reached 104.94. And right now, you will see this is KWEB is pretty in the downtrend. This is what we are keep saying is uptrend and downtrend.
Yeah, that's an understatement. Downtrend is an understatement.
Yeah, and a lot of the people, I think I'm pretty surprised. They just keep doing it in the downtrend. That's fine, and but it still suffer the volatility a lot. Right now, you will see there's a public wisdom. This is the KWEB is already above the 30 days moving average. So that's probably the first time is really stand up the 30 days moving average. Is a resistance line is on the top. So it's a lot of volatility still on the way. But you will see the bottom line is 43.39 is increase a lot, almost the 10%, more than 10% in recently. So this is a high volatility recently. I personally believe a lot of the market risk is already released or people price in.
When you're saying there's a lot of volatility left in KWEB, a lot of these names are bouncing around a lot. Daily volatility on some of these names. I was looking at peng.guo just recently. It's just unbelievable, the daily volatility. And I think most allocators, they're not that interested in that kind of volatility because on a risk-adjusted return, it's very hard to justify that. So, you know, if people are just going to buy and hold, they should buy an uptrend. They should buy the index with an uptrend overlay. And when there's high volatility like this, you're just out. It's okay to be out and to be in cash and wait for that uptrend. And my argument, I think we're not really in sync here, but my argument is that all of these great names that have huge earnings are going to relist in China. And you know what, CCP came out this week and said we're going to have a Beijing exchange. Well, we'll see what that Beijing exchange means, because they were saying that it was going to be for small, medium-sized enterprises. And you know, of course, there's already the Star board that has that already. So I'm not quite sure what that might look like in the future. But does Beijing need a stock market? Who knows?
That's true. This Beijing Stock Exchange is really the hottest topic in China right now. They set the 30% for the rather than 10% capped for the volatility. So that means much higher volatility than this small cap emerging market. But a good thing is really provide the liquidity for the small and middle-sized of a company. They can find another capital market, raise the money, and try to get expanded. Hopefully, China, we all know the security market accumulated a lot of problems. Hopefully, this new exchange could manage and reduce such kind of problem.
And also, I think the listing requirements there will be easier than Shanghai Shenzhen. And if those listing requirements are easier, that will dissuade them from listing in the US, which have lower listing requirements.
That's true.
Yeah. So we're going to watch that. The other thing that we haven't forgotten about is, remember, we put together a portfolio of 10 names that we called China without the China market risk. So we're going to put that up next week. But coming up now on policy is what we're calling all gas, no brakes. It looks like Xi Jinping is trying to cement a legacy. And maybe he doesn't worry about legacy because he's going to perhaps be in a position forever. But the 6th plenary session of the 19th Central Planning Committee will be held in November. And Xi's predecessors all retired following the mandatory 2-year term. And Xi is widely regarded to be in power after his second tenure, possibly for life, because of the amendment in 2018 that passed, which removed the 2-term limit for president. He's also been made the core leader of the party in 2016, a status enjoyed by Mao. Along with Xi, Premier Li Keqiang will be completing his 2-year term early 2023. And nearly a dozen of the 25 members of the Politburo will be older than 68, which is the mandatory retirement age in October of next year. This is all based on a story in the South China Morning Post. So why do I think Xi wants to cement his legacy? Because both Mao and Deng had done something greater in the history. And Xi's platitudes notwithstanding, he doesn't have a signature policy that fundamentally changed society. He's largely credited with continuing policies that were already in place before his ascension in 2013. Despite Mao's great leap and cultural revolution, he's credited with the founding of modern China. And Deng's Southern Tour opened up China and started the economic recovery that's been in place for 3 decades. 中国梦 or Chinese dream or shared prosperity is probably not going to do it. So what might?
I think most of the people see the China from the country level. That's no problem. And so, and also they see the sector level and the company level. That's normally doing it. But I personally believe you should also see from the global level to see this one. That really means China and the United States relationship. So a lot of people doesn't pay too much attention with that. They know it. They just see a lot of the problem and do analysis from sector level rather than from the country level to do the work. That is why the recent change and the reform is really at the country level. And have a significant impact to many sectors. So I think right now she is really doing like the reform and try to solve the accumulated problems, and people suffer such kind of problem for a very long time. That is really, I think, make the decision from country level as well as a global level to do it. And China is not right now is not intended to fight with the United States. It's more focus on solve the internal problem. I think both countries have so many internal problems. If they can solve it, that would be great. And I don't think they have any extra energy to fight each other. Probably they try to reach an agreement. A lot of the reasons they already and different opinion they already exposed, and in the past couple of years, I think right now it's more likely to see how much common ground and how much agreement they can reach it.
It looks like when the government focuses on what they believe is effeminate actors or coastal elites or entrepreneurs or the Beijing stock market or movies, television, media, social media, I don't think the US investor or the US policy really cares that much. people may think it's silly. You want to take off these competition shows off TV. Well, fine. You can be free to do that. I think where the conflict comes in is where policy and investment overlap, which is like the South China Sea. That's a big conflict because a ton of trade goes through the South China Sea. And some of this Belt and Road stuff, when projects are put in place and countries can't pay it back. I mean, Lithuania was a new one this week, like pleading with the European Union. So there are areas where if it's China-centric, it's fine. Let the government do what they want and let the people respond how they want. But when those policies leak out or bleed out into international affairs, I think that's where the friction comes in.
Yeah, I think the China is really in the critical period internationally from a global level. So some area could be decoupling from the United States. That is also China worry about that. So they probably doing like the internal reform adjustment just to prepare for the worst scenario. And the South China Sea is more like the political related pressures. So whatever, they cannot reach agreement, that obviously South China Sea is get intense. But I think pretty much under the control. Nobody want to fight it right now. As all the Chinese know, like how to transition the power and especially for the central planning committee of the party. That's also a very critical period to make the change and to plan the next 5 years. I don't think President Xi will retire at this time, but it's more like the people want to know what happened for the next 5 years. So right. That is a very critical time.
Would you predict any surprises?
I think, and I don't predict any surprises. That is tons of the information on the internet right now. But I think I'm more focused on the stock market. I think smarter public wisdom will tell us what's going on with that.
Yeah, I mean, that's why we said in the earlier piece, every month since November, there's been net inflows to the onshore market in equities.
Yeah, right now it's pretty much we will see the answer pretty soon and almost 2 months.
Yeah, okay. Well, we'll be looking out for that. Thanks for tuning in to the first episode of season 2. Appreciate your comments. Let us know if we're missing anything, and we'll follow up with you on a weekly basis. Great to have you here. Thanks.
Thank you, everyone.